So traders who are really want to make profit in binary options, it is very important to watch this video. So from today we are going to gradually learn 23 candlestick pattern which come every time in binary trading. If you learn 2 pattern by giving 10 minutes every day, so you will learn all the pattern in 10 to 15 days. We will see bullish and bearish candles together so that you will understand better, and I will teach you all this pattern in such a way that you can remember them easily. So we will cover all the candle details gradually. So for this we need a few days time. In a week we will see one video of new strategy and one video of basic concept, so that you will also get a new strategy and your basic concept will also be learned. In this way you will have a lot of fun learning and you will also become a perfect trader. So we are going to look at 23 candlestick pattern that will make huge profit in binary options as well as help you become a professional trader. In this we will see 11 bullish candlestick and 11 bearish candlestick pattern and one neutral candle. So you will always get to see 2 such candles in the market. Green candle always open at the bottom and end at the top, and the red candle always open at the top and ends by going down, and the lines on both sides of the candles are called shadows. These are called upper shadows and these are called lower shadows. You always have to keep in mind that candle more green means more bullish and candle more red means more bearish. Candle less green means less bullish and candle less red means less bearish. In binary option you always set the time frame of the candle to 30 seconds, 1 minute or 5 minutes. So at that time each candle show you what happened in that 30 seconds, 1 minute or 5 minutes. Let's say we have selected a candle time frame of 1 minute, so you get what is happening in the market every single minute. It will know. Some traders do not even know why we have selected the 1 minute candle. So always remember, when you select 1 minute candle, it means you want to see what is happening in the market every single minute. And candlestick is very important while trading, because if you add this candlestick pattern with whatever indicator you are using, then your trading will become pro level. So in this video we will see 2 candles, which is a hammer, which is a bullish candle, and the other is shooting star, which is a bearish candle. So in the hammer candle we will see what is a hammer, what do you know from the hammer candle, and see an example of it, and the same will be seen about shooting star. So let's first know what is a hammer candle. So when there is a downtrend in the market, a hammer candle is formed after the downtrend, which look like this. Hammer is a bullish reversal candlestick pattern. It should be formed at the end of a downtrend. The long lower shadows suggest that initially the seller took the price very short near support, but then comes the buyer and they eventually took the price up and closed it higher than the opening price. Now let's see what does the hammer candle tell us. As we just discussed, the hammer is formed after a fall in the stock price, indicating that the price is attempting to form a bottom. The hammer indicate that the seller have lost control of the price, indicating a possible reversal of an uptrend. It should be noted that this candlestick should be formed after 3 or more bearish candles, as it gives more confirmation. Confirmation occur when the candle after the hammer closes above the closing price of the hammer. So whatever indicator are you using, when the indicator shows the market in oversold condition, and if hammer is formed at that time, then you can buy there, or you can take entry even when the market comes near the support and make a hammer. If you know how to become a hammer in the real market and how the market goes up, want to practice it, then there is a website for you called Stockage. The shooting star is a bearish candlestick pattern with a long upper shadows and no lower shadows. A shooting star is formed after an uptrend when the market reaches the resistance or overbought condition. The shadows of a shooting star is 2 times bigger than his body. A shooting star opens and rises strongly during the trading session, showing the same buying pressure seen in the previous trading session. And at the end of the trading session, seller push the prices down near the open. This suggests that by the end the buyers have lost control and the seller have taken over. The long upper shadows indicate that buyers are losing position as the price fall back to the open. This candle helps to confirm the price reversal and indicate that the price will continue to decline. Just one thing to keep in mind, after the uptrend market should come near the resistance or the indicator you have used, that indicator will be telling the market when it is overbought condition and then become a shooting star, then you can take entry. Because if you pay attention to this thing with the indicator, then your confirmation will increase a lot. All you have to do is learn something 21 candlestick pattern which are quite simple to use with your YouTube strategy, and then see how much your winning ratio increase. So today we have learned about hammer and shooting star. In the next video we will learn about piercing pattern and dark cloud cover, but before that we will see a new strategy. So see you next with new strategy. Bye bye.